Hello and welcome to Commodity Champions. I'm Manisha Gupta. Well, India has set a target of record food grain production of over 354 million tons in 25-26, the crop year that will begin in the month of July. This comes after IMD predicted above normal rainfall in most parts of the country in 2025. Meanwhile, the wheat procurement has crossed 29 million tons for the current Rabi market season. This is the highest in 4 years thanks to the bumper production. The government is confident of achieving the target of 33 million tons of wheat procurement. Joining us now to discuss this is Somnath Chatterjee, CPO at ITC Food Division. Mr. Chatterjee, hi, thank you so much for joining in. It has been an interesting year and a very eventful week at that. I know trades of all sectors are finding it quite challenging to go from here. But when it comes to wheat, the government does seem quite confident, one, on the crop and second, on the procurement. What is your sense on that?
Good evening, Manisha ji. Thank you for having me. Indeed, it's been a roller coaster ride for commodities buyers like us. This year, we initially had a fright that it's going to be a early onset of summer, and the period post Diwali is always a worrisome period for the wheat crop because sudden spike in temperatures can impact the crop. But the gods were kind. We got a bumper crop, and as is evident from the government's procurement numbers, we've done 29 million, as you've just pointed out. And yes, I think 31 million is a foregone conclusion. What that means is that after a period of 2 to 3 years, we are now once again going to be quite comfortable in our wheat stock position as a country. There are no thoughts of imports at the moment with this kind of a crop. The government will have enough in its granaries to meet all obligations of PDS and other allocations. There have been some very interesting developments. The government of India, for instance, has just issued 3 to 4 months supply in PDS in view of the border tensions, so that there is no fear in the minds of the public that India is blessed with enough food grains. So that is one of the things which is happening. Also, if we were to speak about India's food security and the quantum of wheat which is available, well, we are at about 31 million. We will be higher than the number which is prescribed for the Food Security Act. Having said that, this number has been arrived at by the 2012 census, and we are overdue a census now, and one is likely to happen perhaps in the next 1 year, where the number required as safety stock is likely to go up. So I think all in all, we are in a comfortable position. The private trade has been able to procure enough wheat. So I think in terms of wheat and rice, India is in a sweet spot.
Ms. Chatterjee, while we are looking at 115 of a target from India government from this year, the next year is even stronger because the government has put those numbers out as well. So 117 million tons for next year. What does it really mean for the trade?
It's good. Consumption has been rising, and as has been evident, whenever there is like in the recent border tensions, one of the big solace for India was the fact that it has this big stock of food grains and other food articles to be able to sustain any issues which come.
Okay.
We also saw the same thing was a big strength for India during COVID, right? So the fact that we had our granaries full at that point of time really helped millions of our countrymen.
Sure.
So I think after 2 to 3 years of touch and go crop, of very inflationary wheat prices, we have finally come to a good place. And if the monsoon is kind to us, as it is likely to be, because we hear from our sources within SkyMet and IMD that this is going to this promises to be a above normal monsoon with perhaps 105, 106% of long period average.
Right.
Also, a very decent uh, spatial and temporal distribution of the monsoon. So I think our dams and our water catchment areas should fill up, and that should be great for not only the kharif crop, but also for the
Oncoming
ensuing rabi crop.
Well, absolutely.
So, yeah.
So while the supply side situation seems quite well right now, and as you rightly pointed out, import is something that is not on anybody's mind right now. What are the numbers that you're looking at in sense of consumption? Because there's a big range that the industry really seems to be talking about. Where would you put that one? And as you said that the private trade has been able to acquire quite a bit right now. Are those pipelines quite comfortable as well?
Yes, the private trade pipelines have replenished. For instance, let me give you an example. This year, the state of Punjab, which is Punjab and Haryana, in fact, contribute always regularly and the biggest quantity into the FCI procurement campaign. This year, Punjab has actually not really stepped up to the plate in terms of FCI. So the procurement from there is a little lower because there is a lot of private buying which is happening.
Okay.
That's great for the farmers. They're getting their MSP. And all in all, a larger crop, which is more or less all selling at MSP or higher, is great for money to go into the rural economy.
Oh, absolutely.
So I feel that, the private trade is comfortable. This may not be a year of very high inflation in wheat. Maybe people will get their cost of carry. But yeah, we are quite comfortable, and that's great for business. Because very high inflation often tempers demand, and we don't want that.
Absolutely. I also want to talk about when we are talking about all things nice here, and last year it was stock limits, it was disclosures as well. Do you see all of those measures not come in this time and not hamper trade?
Yes, ma'am. We don't see, while the stock declaration part is still on, we are hoping that maybe the government, in view of the comfortable situation, will do away with that as well. But there are no limits in place, and I don't think the government would like to put any limits because the stock positions are very comfortable. This allows us to focus on our main business, right? Rather than keep filling declarations and forms. Ease of doing business will improve. So I would request the government to even do away with this weekly formality, which is there on wheat at the moment.
I also want to talk about consumption one more time, because you talked about that the consumption has been on a rise as well. When it comes to wheat and when it comes to wheat products, have you seen those numbers move? Because wheat products seems to be doing better in sense of growth.
Yes, that's right. Our number for India's wheat consumption is around 98 to 100 million tons. And then, give or take a little bit it's a large country and the statistics are not very accurate. But we feel that has been, consumption has been growing at about 2.5% per annum. And if indeed the crop is, around 115 million tons this year, then yes, our buffer stocks will build up and the private pipelines will also build up.
Ms. Chatterjee, thank you so much for joining in and taking your time out for CNBC TV 18. So all seems good when it comes to wheat as a place, because last 2 years were not so nice. And this year, the numbers are great. Consumption seems well. Government has enough procurement and the private trade also seems to have replenished quite a bit. Well, moving on from wheat, let's shift focus now to soybean. The soybean prices have surged after United States and China agreed to substantially lowering tariffs for the 90-day period. The U.S. has cut duties on Chinese goods from 145% to 30%, while China proposed cutting tariffs on U.S. goods from 125% to 10%. What does this really mean for the edible oil sector? Joining me on the show to talk about that is Sudhakar Desai. He's CEO at Emami Agrotech and president at IVPA. Mr. Desai, hi, thank you so much for joining in. First of all, your reaction on this, because China is a big buyer. And do you see price reaction, as we've seen in the international markets yesterday, ease down a bit? And what does it mean for you as a sector?
Yes. With the size of 100 million tons of crushing in China, it's basically a market mover, definitely. And this particular move after going up to 145%, 45%, and then coming back to normalcy would mean that a lot of grains and beans and etc., which are offload to China and facing a uncertainty of tariffs and this and that, will get somewhat resolved. I think that's the good news for the global trade in this space. And China would typically buy about 60, 70 million tons from Brazil, maxed out, and from US, normally about 25, 26 million tons. So I think this trade resuming is a good news. But having said that, meanwhile, the US tariff revenues has gone up from 6.6 to $7 billion to about $15 billion currently due to the increase in tariffs on many of the items. So while that may not translate immediately into inflation, these revenues in US because the crude is down, but eventually it is creating some kind of import fund out there due to these tariffs. But within the complex of soybean, it is a good news that the trade flows will. Last time I said that trade flows are going to be tremendously changed, but I think this will put it back in the track.
The second point I want to talk to you about is the USDA report. So while Argentina and Brazil crops looks good, the overall world stocks and the US output for that matter is slightly on the weaker side. Do you see this meeting, there's a meeting point between the two, or do you find the USDA report bullish for the sector?
USDA report at the production level is like neutral because they said about 4 to 5% lower acreage, but compensated by higher yields. But that's not it. With the exports that are resuming, they have actually surprisingly put the end stocks about a whopping 15% less. That is why you see the market has turned bullish for the beans. And eventually, whatever is bullish for the beans is also going to be for the soy meal also and for the sector and eventually oil also. But there is one thing that is much awaited is basically the biofuel policy. It also showed a symptom that the biofuel policy in US will be maintained in the same manner or improved. But when you look at it more closely, I think if the UCO is not coming in and there is a question mark about whether canola will go in or not into biodiesel. So after all, this is about 15 million tons of biodiesel consumption. So if it is restricted only to canola and soya and no more used cooking oil and all that, I would see this as bullish Chicago also and bullish soya oil also. This is how I see it. As far as the global production is concerned, you're right, Brazil is 169 million tons, Argentina is 49, US at about 117 million tons. Does look like about 25 million tons of more soybean crop, but in terms of oil, it's hardly about 500,000 tons, which will easily compensate the UCO. And as you know, the demand for soybean oil has been very good. So this is how I see bullish beans and rest of the things. But the question mark is on biofuel.
Sure.
I think soon on the 20th May, there's going to be a further meeting on the biodiesel in terms of how much of impetus it will get in the US soybean sector.
You mentioned a point about used cooking oil. What is the overall global market when it comes to that? And is India even a stronger percentage there?
No, not really. Right now, it is very negligent. In China, there used to be a used cooking oil which was objected by in US and Europe also. So I think that's a different ball game altogether.
Let's talk about the Indian markets then. And when you look at the Indian dynamics, how are you looking at the import for the month of May and June? What is the kind of demand growth also that the Indian markets are looking at when it comes to edible oil?
Yes, on the third section, which is the domestic oil and oil seeds, you have the ensuing mustard crop, okay, looking firm. Because the crop size is a big mystery. I think people are talking different numbers, but the harvest pressure will come for a month or so, I think. Indian stocks are tight because of the steep inverse in the palm market. People were buying hand to mouth, and now that the palm has really adjusted itself, I think India would buy and stock up some more palm. On the soybean domestic front, government has bought about 18 million tons during a harvest, but they've been consistently releasing about 3 to 4 million tons of soybeans into the market. So I think the consumption is a little bit question mark right now. We can't really say about consumption because it is the inventories which have come down because in the palm market the forwards were appearing very cheap. So nobody was buying a hand to mouth, but now the buying has resumed. So I would say before we conclude whether the demand is neutral or plus or minus 2%, I think we need another 3 to 4 months. And I expect import demand to resume. You are very well aware that the palm import demand has fallen to about 400,000 tons. I think India would require about 1.2, 1.3 million tons on average in the next 3 months, broken into palm, something like 700K on average.
Okay.
That is 7 lakh tons on average. Soya about 3.84 lakh tons per month in the next 3 months. And sun oil, being a premium oil, would continue at about, let's say, 2 lakh tons. So in terms of global supply, I think well consolidated, stable. Indian demand will be good in the next few months. Palm market is supported.
Okay.
Much depends on the soya in terms of how much rally can it have above palm oil. I think that depends on the biofuel policy, which is going to be clarified somewhat in the rest of the month of May.
My final question really is on a price, because for most essential commodities, I mean, that really seems to be the narrative, really, that it is not a concern or a surprise anymore, monsoon being a positive there as well. How are you looking at the prices for many of these edible oil within the sector? And also, I know you have been pushing for a lot of government policies as well. Any conversations or updates there?
Yeah, the update is basically, as you know, the Nepal, SAFTA country, zero duty imports are scaling up to about 78 to 100K per month. We definitely, as IVPA, wanted some solutioning out there. It is there in the horizon. I think I'm pretty sure government would like to rebalance this anomaly, I would say, in terms of non-level playing field for the Indian industry, especially the ones who are located in east and northern parts. You know, it's very obvious that the Indian importer pays a 27% duty, 35% duty on refined oils, but whereas via Nepal or Bangladesh, it's going to be zero duty. So this is one aspect of it. Otherwise, the refined oil imports are continuing because of the inverted duty structure in the origin countries. So these two are our fundamental issues. Things are moving in that direction. Let's hope some solution will come out with your right questions.
Oh, well, absolutely, Mr. Desai. Thank you so much for joining in as well and throwing a light on the concerns that the edible oil industry looks at. And of course, as you said, that the imports will be higher in the month of May and June versus what we've seen in the first part of this year. Well, on that note, it's time for a break. But don't go anywhere. We will discuss the outlook on India's sugar sector on the other side.